So, so I think all of us are back now. So let's just continue. So stop loss was actually so simple. But listen now carefully. Stop loss is like an order. It's also same thing like you place your trade. Like when you're about to place your trade, when you're about to buy or sell, you click right. Yes, stop loss was also same thing. So stop loss, you are going to set stop loss to prevent, like, this is actually the amount of money you wanted to lose. And that's all. I don't think there is more explanation about that than just this that I just said right now. You can see some stop loss is always good for money management, other than to help prevent a trader from acquiring more loss. Just a particular amount you wanted to risk. Then once the market actually reach exactly the point you feel like it's going to take out your L, then it's good to go. Then the trade will close automatically. So let's just move to the next. So same thing happened to take profit. Take profit was actually like you set it as a price to last way, which you want the market should give you a profit. And then once the market actually reach the certain place you set your take profit, then you are in profit. You are still in profit. Once the market actually will reach your TP, then it's going to close automatically without even you pressing your system on anything, without even looking at it. So it's going to close automatically. So same thing, they are just opposites. SL mean stop loss, like when you are in loss. Take profit is also opposite. You can see this. This is an order that help you to lock in whenever profits you made in the market. If you forget, the market always go up and buy and sell. That's it. So imagine you are in a trade and you are making profit. You have your target already. When you are in a trade, you always have your target when you want the market should go. So the take profit will be set where you actually want the market should reach. So when the market reach the certain place you actually want, it's going to close automatically in profit. Why the opposite is stop loss is going to close automatically in loss. I don't think there is big deal in it. Just that is it. That is simple as that. So I think some message. So thank you for the comment, like you guys understand now. So if you understand, because I have to come again and try to explain it now. So if you understand very well now, please can I see I, just I. Thank you. I need like, yeah, cool, cool, cool. So appreciate. So now I think I'm going to bring in my brother again. So we are doing this just to feel excited so we can just be able to, do all these things. Nee, are you there? I think my brother is not here. So I think I'm going to continue. Yeah, I think I'm going to continue. So I believe you guys actually understand the stop loss and the take profit now. So let's move to the next. Because anybody may ask, like, what do you learn? You have to learn something. You have to gain. Every day is actually the new day. So you just have to always gain something. So let's lot size. Lot size. So what do you mean by lot size? Like anybody may actually say like lot size. Standard lot size. Do you know there are amounts of money you can probably deposit? In a demo account, you may even set your balance 500, 200, $100. So the mini lot size, micro, nano, and standard. These are all the lot size we have. Standard is for, a profit like size of one lot. If you want to use a one lot account, you can't use one lot account on a small account like $5, $20, $100 safe, $200, $500, just for the risk management. You can't use this lot size because lot size are the really, really what really, really mean. But you see this nano, I don't think this nano really exists because for me, it is, I don't think it exists in forest. I think it can exist in maybe commodity or an index and all this kind of stuff. But you see, this micro exists 100% because profit per pips. If this is 0.01, the amount of money you have in your balance will determine the lot size you are going to use. Trust me. If you have big amount of money in your balance, then you can actually use a standard lot size. You understand me? You understand me? So I think my brother is there. So let me just see. Let me just bring him in. I think he's here already. So that is it about that. So this 110,000, like for the safety of your account, you can actually use 0.1. Did you understand me? So the account you have, like if you deposit $10, $20, this micro is the best. You can use this amount, but this amount, like if you enter this amount now, and me I enter this amount, we may take the same trade. If me I'm making $1,000, you will be making $100. That's how it. That's it. It's just so simple like that. So and that's the difference between the profit per pips, because you can't use $10 lot size, and someone will use the 0.01 lot size, and you expect you guys to make the same profit. No, it's not possible. So the lot size you use will determine the amount of money you are going to make. So unless I forgot that the nano I said the other time, this is it. You can see it's different. So it's everything actually compared to the amount of money you have in your account. Pips calculation is determined on, everybody, we have a different pips. We have a different PS. If you remember USD, this is USD now, and this is JPY. So this is USD, why this is JPY, why this is gold. So all the pairs have different calculation if you want to calculate their pips. Did you understand? All the pairs have different calculation if you want to calculate the pips. Did you understand? So if you are trading USD, like you have to calculate it in different way if you are trading DPY. It's also pair. Don't forget. So below 10 pips is 0.0010. These are when you enter a trade, you can see it clearly. If you take profit, and then if you don't forget the other time, this lot size, stop loss always be like 20 pips. And why take profit always do like 50 pips? Let me give you a short example. I deposit $100 and I use 0.01. This 0.01. Let me say I use 0.10. Then let me just calculate, if I want to lose, I want to lose 20% of my account, which is $20. And if I want to make profit, I will have to make like $50. My stop loss will be small, while my take profit will be big. That's the difference. If you want to set your take profit have to be 50 pips, while your stop loss have to be 20 pips. So that is just the main reason why the stop loss and the take profit is good. So it prevents your account from blowing. So I think that is how it is. So you see, this calculation was actually being like, this one is different. Sell for sell, and why this one is for buy. You can't expect the same the same calculation. You can't expect it should be the same because when you are buying, you are going up. Why when you are sell, you are coming down. So the calculation have to be different. And you can see here, if you calculate it, then you always got your profit. Like the amount of like a range of where you're going to put your TP and your SL. You can see the TP of what I'm saying, and you can see the SL of what I'm saying. So that is why it's always good to calculate your pips. Like this is how much I want to reach. Okay, money $5,000. I want to reach $1,000 on it. So the $4,000, even if you set it and go and sleep or go any fucking way, your $4,000 will still be safe. So that is, it's always good to calculate your risks if you want to buy. And don't forget, every PS have a different calculation. That's why you have to come here. Like every PS, you can see this one will start from 1 point, and this one start from 112 points. You can see the difference between it, 1 point and 112. And this one start from 1,221 points. I think you can see the difference between the three pairs. And that is how all the pairs are different. They are not the same. So if you want to calculate it, you have to calculate it in a different kind of way. I believe you guys understand. Please, if you understand, let me just see I, please. Let me just see eyes. Bro, I can't hear you again. If you can, if you can hear me, just let me see I, please. If you can hear me, just let me see I.
Hi. Hi.
No, no, no. Just let me see I in the comment section. So I'm sorry, don't mute your mic, please. Don't mute your mic. I understand, but not really well. See, yeah, yeah, yeah. You understand, but not really well. I like you as you actually said the truth, but once you go back to watch the videos, then you will probably understand more better because all these are just simple. Traders are not God. They are a human being like you. Like all of us are simple. If anybody say you can't be a trader, that's just a lie. So nothing is special. And what is a trend? How do you know when market is trending? That's the first thing that actually comes to your mind. Like, what is a trend? A trend. This is when the market is making continuation. Don't forget I said something. The market always move in a two kind of way, either up or buy, either up or sell, either sell or you buy. That is how the market move. And you can see up or down. That is it. That is it. There is nothing. It's not actually hard. Just have to. So uptrend. Here is an example of uptrend. Series of high. Like when the market keep breaking the high. If you see here was actually high and the market took it out. Here was a high. Here was actually resistance to it, if you don't forget. Then the market also had to do what? Take it out too. For us now, for an advanced trader, like this place has already changed to something. So I think we should just keep everything low. So this is an uptrend when the market keep doing what? Making a higher high. That is it. So simple. As a result, you look for a long time buy. But uptrend is for buy. Market is going up. That is all. This is the live chart. You can see in the live chart, the market will keep going up. Keep going up. Uptrend. So the downtrend is also opposite. Here is the market. Keep doing a series lower high. Like it's breaking the lower high. You can see it. This is actually so simple. if you put your mind into it, I don't think if you do not understand clearly, you can, once we drop the video, watch it like 2 times. Then once you know you watch it, trust me, my brother, it's just going to be simple. Trust me. So things to notice. There's always best to find trend on a higher time frame. So this higher time frame, I think there is someone that's still going to teach us because I can't, there is always time for all the charts. There is always time for all the charts. So, so let me see, maybe I can show you guys, but I have a short time. So there is always time for all the charts. So there is always time for all the charts here. If you can, let me just leave it for now. I do not have my trading view login over there. So we have 1 hour. It's just time. One candle form for 1 hour. All the candle you see on that 1 hour time frame means all the candle actually form for 1 hour. They spend 1 hour each before they form. So we have 4 hours. All the candle you see under 4 hours, 4 hours each. And we have it day 1. This D1 is such as daily time frame. All the candle you see on the daily time frame form for one day each. All the candle one day each. So it's so simple. You guys can just, once you feel like okay, 1 hour, all the candle form on one hour. Just after 1 hour, you always see a new candle. Why? On a 4H, all the candle form for 4 hours each. On a D1, which is daily time frame, all the candle on a daily time frame actually form for one day each. You can see all these have to combine together. You have to be like understand everything together. And if you see this note, it's always the best to find trend on a higher time frame. It is ideal to wait for a pullback before entering the market. Patience is the key. That, trust me, is the key to Forex. Is the key. It is better to miss an opportunity than to get on the wrong side of a trade. If you wait enough, then you can just get, when the market got to the right position when you're about to be like enter your trade, then they enter. You don't have to see many confirmation before you decided to enter. I believe you guys are getting something. So I'm going to, so this is the last one. How to draw a trend line. Is an uptrend. See, a trend line is so simple. You just have to, and it's one of the most important things. Let me tell you one thing. Some advanced, like let me just say advanced trader, like, okay, I'm trading for a few years. Some do not know how to draw a trend line. Trend line is so really, really important. You can see this is a live chart. This is the 4 hours I'm trying to show you the other time. You see this time, all this time work together. This is the daily time frame, weekly time frame. If you come to daily time frame, all this can do form for one day, one day, one day. But I don't have time. I think there will be an extra video after everything, and there will be opportunity for a lot of people that actually want to know more. So all this can do actually form for one day. Same thing happened to all on this 1 minute time frame. All this can do form for 1 minute. So that is how it be. So how to draw a trend line? Let me just choose 1 hour so we can just see. This is a 1 hour time frame. To draw a trend line, it's so simple. You see all your instrument there, all the instruments you want. There will be and it's free. You are not paying. If you see this is an edge and this is an edge, you have to join the two edge together. That's the trend line. For you to understand now, you don't need to rush yourself. You see, it's connect the two recent swing low points. So these are what we feel like, okay, I think the market, my trend line is still valid. And in a downtrend too, in a down above the price, it connected the two recent high points. Same thing, was just opposite. Like this one too. Let me do the downtrend also. So because I have to pass this is the downtrend also. You see, this is the uptrend, that is the downtrend. Simple. That is how to draw a trend line. If you can do this, practice on your own because we can actually make you the best. So I think I'm done for now, my brother and sister. And please, if you understand, please, if you understand, and if you do not understand, we are still going to release all the video. So I think I'm going to pass the mic to my brother. So for the last topic we are going today. So, brother Ni, are you there? Hello.
Yeah, Dammy, I'm here with you.
So I'm sorry I took a lot of time, but
Okay, once again, good evening, everyone. Um, I'm glad to be back here. So, Dammy, thank you very much for taking us through the whole lecture. Thank you very much. Really appreciate it. So, here we are starting with basic trading terminologies. So, I'll just sorry about that. Okay, so these are just what I will explain here are the terminologies, the things you'll be hearing. Probably someone says it beside you. You that you are an aspiring forex trader now. You have someone beside you or someone you know in your area that trades that now says, "Oh, what's the lot size for that trade? What's the leverage? Are you placing a limit order?" You get words like that, stop loss, take profits, support and resistance. At least I know if you're a beginner, probably you've never heard about stop loss resistance, stop loss, take profit, resistance, support before. But now with the lecture Dammy took us now, I'm sure you have an idea about it. And when they say it somewhere, it won't be like strange to you. You get so that's all. So, and I feel that's all this seminar is all about. This webinar is all about. It's all about introducing you to the forex industry, putting you through and showing you what it's all about and how these things work. So I'll just quickly brush through the whole terms that we have. We have assets. Asset is basically like the currency pairs that we taught you guys yesterday. Euro USD, GBP USD. Sometimes it can be commodities like gold. Gold is represented as XAU USD. It can be US 100. It can be anything. It can be silver. I don't know, name it. It can be metal. It can be anything. Stock, forex pairs, currency pairs, crypto pairs. It can be BTC. It can be Ethereum. It can be Solana. You get so any of those things. Those are assets. So we have bid and ask. Bid. This is the price a buyer is willing to pay. Why ask is a price a seller is asking for. You get bid and ask price. Those ones they are not usually used, but they are also important. They are like prices that buyers and sellers are actually negotiating on. Like it's just like you going to the market. They are selling something for 5,000 naira. You say I want to pay 4,500. The person tells you it is 5,000. Eventually, you guys can come to an agreement to pay 4,700. You get so it's something similar to that. So, but that's not really used in most of these our trades. So, moving on, we have spread. Damien has explained that to you guys. Spread is just the difference in price you get, and another thing about spread is some spread might be large, some might be small. These are the ways all these brokers, that's how they make their own money too. So you have to look for the best brokers. I think Dami will like share you guys a link or something to like show you the best brokers we have out there so that you won't just fall into the hands of brokers that will like exploit you or just take your money unnecessarily due to their wide spread. So that's that about spread. We have pips. Pips are the calculations used for the entries of trades. They stand for percentage in profit. So Dammy has explained how pips work, and he told you that the calculation for pips is different for each currency pairs. We have different one for GBP USD. We have different one for gold, which is XAU USD. We have different one for BTC USD. So um they all have different ways of calculating them. I think I'm speaking too fast. Let me just slow down. So they have different ways of calculating them. You just have to know these things. I think you can always refer back to this PDF that shows us the calculation. And there are also other ways to calculate. We'll update you guys about that. We have baby pips where you can like is it even no, I think pips calculator. Baby pips is a basic one. We have pips calculator where you can like calculate in case you don't know yet. So we have all that for you. So we have lot size. Lot size is the number of unit of a financial instrument. So lot size will determine how heavy you are going into the market, how much you are willing to risk in that market. It is lot size that will determine that. Lot size is one of the most important things you have to know. You can't have $100 capital and start using one lot size. You just have to know what lot size to use for what capital. So that's that on lot size. You have to know your capital and the kind of lot size you are using. So we have leverage. Leverage is using borrowed money to execute a trade. It's just like you having a 5,000 capital. Any currency you want to put your 5,000 in, it doesn't matter. I'm just using it as an example. So you have a 5,000 capital, but these brokers, they can give you a leverage. Leverage is like them borrowing you money to increase your chances of taking higher risk in that market. You get. So you can have 5,000 and they will give you a leverage of someone that has like 7,000 or 10,000. They're just giving you the opportunity to like execute the trade with a higher risk. It has the negative side and it has the positive side, but the positive side is that if you are making money, you are making it bigger. You get, and if you are losing bigger. So that's just the ups and downs to leverage. I would like to know if you guys are hearing me, to be honest. I've been speaking for a while now. If you guys can hear me, as you all know, just say I in the comment section. Oh, okay, fantastic, fantastic. I still need more eyes so that I can know I'm not just speaking to the wind. Yeah, thank you, guys. Okay, I think that would do it. So I'll just continue from where I stopped. So moving on, margin. Margin is the amount of money required to open a trade. I think you don't really need that, but if you feel you need it, just come back to this PDF to read about it, but you barely need it. So moving on, we have long and shorts. Now, this is where most of the actions take place. Now you are getting into forex trading properly. Long and short, these are ways of executing trade. When you say you want to long, it means you want to buy. When you say you want to short, it means you want to sell. It's as simple as that. It's not a complex English. So here they are saying to long means buying an asset, expecting the price to rise. So as expected, once you buy something, you're expecting it to start going up now. You can't execute a buy trade and expect it to start falling. That means you want to lose money. So to buy or to long, buy is also the same thing as long. So to buy or to long means to buy an asset and expect it to rise. And to short means to sell an asset. So moving on, market order. This is the order you place. A trade executed is instantly at the current market price. So market order is like you clicking buy. Once you click buy, you've executed the market order. Once you click sell, you've executed the market order. So these are terminologies that we use in. So these are just these are like things you just need to know. You don't have to cram anything. This is not you're not in a university, you're not in a school system. We are not giving you all these things to cram them. This is just to have over time, these words will become there was to be frank with you, they will become part and parcel of you. Like there's no way anybody will mention anything that you won't know. Over time, once you like stick to forex trading and you don't take time off, you get forex trading is something you have to be consistent with. You have to show up every day, every day. Even if something keeps you busy for a day, immediately you have time, you just have to check the markets, know what is happening. So over time, these things, all the words here, you get familiar with them. And all our tutors here, I'm sure from the top of their head, just tell them any word, they know the meaning, they know what it means. You get so it's not something you have to cram, just give it time, it will set in. Everything will become part and parcel of you. So limit order, same thing. Limit order now is different from market order. Market order, you are executing it instantly. You are clicking on the buy or sell. But the limit order, you are like you are putting an order down for when market gets to that particular place. So once you put a buy limit order, once market gets to where you put the order, market will buy. It's just like you're commanding market that, okay, maybe I won't be around. Whenever you get here, just buy for me. You get. So that's what that means. Dammy, move to the next page, please. I think I've moved there since. So we have stop loss and take profits. Dammy has explained that stop loss is how you control your loss, and take profit is how you um like close your profits, your trading in a profit. So moving on to the next page, we have technical analysis. Now, technical analysis, this is the most important. I would say the most important thing you have to perfect in your trading career. This is something you have to know what works for you. You have to learn a particular trading analysis, a technical strategy, a technical analysis. You have to learn it. There are so many strategies out there, but you just have to learn one. Hopefully, over time, in the probably starting from tomorrow, most of our guest speakers will start introducing you guys to these strategies properly. But we are just trying to give you the basics for today. So technical analysis, it is using charts and indicators to predict price movements. Using charts and indicators to predict price movements based on historical data. So what this means is that using your knowledge, what you've learned, and what market has been doing for a while to like predict where market is going. So that's just what it means basically. You get, I'm not trying to go too deep into all that, but what it just means is that knowing what you expect market will do. You get, you expect that, okay, when market comes to a support, just as we've told you, market will bounce back and start buying. Allow market to do this thing. Wait for market to come to that support and buy it. That's what it means. I'm just trying to brief you on what that is. There's a lot to it, but that's just like the simple explanation to it. So fundamental analysis, these are economic and financial factors that influence the markets. So these are like news, occurrences, market.
So thank you.
Issues, stuff like that. So it can be anything. Fundamental analysis are just factors outside the normal thing that we know that affects the markets. So we have trend. Trend is a particular direction in which market is moving. I think Dammy has taught you guys that we have the uptrend and we have the downtrend. Those are the two movements. And sometimes market can move sideways, which means it is ranging. Market is not going up, it's not going down. It's just moving from one point to another. for a particular set of time. You get for a particular period of time. So that's just market moving sideways. And then we have support and resistance. Dammy has explained that to us. I'll just keep all that. Moving on to the next page, we have MetaTrader 4. Now, MetaTrader 4 is the platform where we execute trades. So all these things that we are telling you, MetaTrader 4 or MetaTrader 5, they are the platforms where you execute your trade. So I don't have to do much on that. Moving on to MetaTrader 5. This is the latest. The MetaTrader 5 is the latest and it is the most used. So it has special features, it has new features that you can use. So the whole limit order, the whole market execution, it is more easier on MetaTrader 5. So if you want to download, you download MetaTrader 5. That's the most advisable one. So moving on, we have CTrader. CTrader is also another type of platform to execute trade, but we are just trying to focus on one, which is MetaTrader. So we have TradingView. TradingView is the platform where you actually see the market. Although TradingView is a place where you can actually execute market also, but we don't execute market on TradingView. We execute market on MetaTrader 5. So we just do analysis on TradingView. So that's what all that's about. I'm moving on to the last page. We have Ninja Trader. I've never even seen that before. So this is just another type of platform. Don't concern yourself with all this. So all you need is TradingView and MetaTrader 5. So I think that explains everything. So you just have to get used to the terminologies we've explained when Dammy sends us this PDF. So thank you guys. I think we have limited time remaining. Thank you and have a good day.
So thank you, everybody. I hope you guys got something. So, and then for our giveaway, we are going to post the video inside the group. And once you see like you're the one that like you join, the first guy to join or a lady, just DM me straight away.